You had
Uh,
100, you had 134 points on the E-mini this week so far, from high to low. 584 on the NASDAQ, 811 on the Dow. Crude dropped $7. Gold was up $61. Uh, I mean, QQQ, here's one, up 16.48. I went back and researched this. It's been 12 years since you've seen those type movements. But here's the interesting thing. Most of that move, 80% of that move happened after the CPI announcement to between then and the cash open, because most people, just walked in. It was like a whole different world when the cash opened. That's why the pre-market's important. And that's why, I've, for years I've been following it around the clock,
Yep.
but that was just an extraordinary week all in about 2 hours.
Yeah. Yeah, it really was. And we want to dive deep into that, exactly what you talked about, Tom, into that pre-market, that shorter term time frame. And everybody, we're going to talk about that. We're going to talk about the longer term as well. We're here to help maximize your account, help you get on the right side. And we hopefully have some tips for you to do that right now. First of all, hey, there is risk in the market. You all know that. May not feel like that right now, with just like what Tom was saying, just this historic move that we felt, and so much of it coming in that pre-market time. But there is risk in the market, and you need to understand that. And it's your responsibility to make sure you understand whatever you're trading before you ever click that mouse, because you can lose money and you can lose a lot of it. And we don't want you to do that. We want to help you protect the capital and help you grow the capital. And that's why we come back here week after week. And this is perfect because I've got great experts here with me today, with Tom Busby and Jack Carter, both from the very small time frame to the very large time frame. We're going to talk about all of that. And to get things started, speaking about pre-market, let's take a walk back into history. Jack and Tom, do you remember? Let's see if I can get it going here. Do you remember that day? Dubai crises right there in
Oh, I do
2000.
remember. Hey, yeah, we
Oh,
were
yeah.
we were online. We had a
Oh, yeah.
client in Dubai.
Yep.
Remember that?
Oh, yeah. Oh,
Yeah.
yeah. That's what I want to tell people about, because it's because of Tom. I'm going to tell you about this, but I want to know, everybody, do you all remember this day? Do you remember that talk about what waking up in the morning and like being shocked? I mean, it's one thing with CPI coming out this past week and the market is up, but how about waking up in the morning back in 2009 after we had that financial crisis in November, Thanksgiving morning, I believe it was, and Dubai is crashing and the fears are out there, double dip recession, all that, blah, 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 blah. And how did y'all feel when that happened? And how did you respond, Jack? What was, do you remember that day, Jack? And what kind of opportunities did you pick up from that? What did you find about that Dubai crisis back then? You are muted. Can't hear you.
I muted myself because I'm at this stupid truck stop in this guy's. Anyway, uh, I had the luxury of being in the market in '87 when it crashed. And I didn't know what was going on. And I was on the trading desk, the head trader at a small boutique firm. And that day, the dust was still settling. But it was the next day that one client called in. He was the CEO of a company everybody would know. And he bought $1 million worth of stock. He wanted me to divide it up into the Dow 30. And everybody thought this guy is out of his mind. And he had cojones más grande to be getting in when everybody was scared to death. And what I learned from that is, I was really young, maybe 27 years old. I learned from him, to take advantage of an overreaction. And I love that about the pre-market, because you can do that almost every day when something's going on, like earnings or something. The pre-market is cowboy times, because there's no market makers in there to stabilize the market. So it can get real wild. So if I see something like this in the market, if I don't make a move in the pre-market, I'll just let the thing play out and then take the other side right when it kind of stops going down, and day trade it. I won't buy and hold it, but I always think that when we get an issue like that, it's an overreaction, and I like to take the other side.
Yeah, absolutely. Well, I want to go next and answer that question because I was in the market pre-market. And, you all have heard me say before, and I'm going to say it again because I know what Tom's going to talk about today. And I'm very passionate about that pre-market because still to this day, on that morning in Dubai, that morning, I was up trading really, really early. It was like 3:30 in the morning, Eastern time. And I saw that thing. I mean, I saw it go down. I literally saw it go down. And then I saw it start ticking back up. And I put on my Tom Busby hat, and I'm not kidding, because it's because of Tom that I made this trade, because I took the knowledge that he shared with me. I paid for it, I paid a lot for it, and it was hugely valuable. And today, to this day, that is the best single contract futures trade I have made the most money because I had confidence. I wasn't afraid because of what he had shared with me. So I wanted to bring that up as we head into next week for Thanksgiving. And we know that surprises are going to happen at any time in any year. And you got to be prepared for them, just like Jack said. And with that, Tom, what were you thinking on that day?
Well, I'll tell you what I was thinking, because you know that people, and this is why I always do it, and I've done it this way for 23 years. The day after Thanksgiving on that Friday's a half trade day, but it's the most, probably one of the highest probability days to make money early and in the morning. And I've done it for years, and my whole family knows this. On the Friday after Thanksgiving, I'm always doing a webinar then. And we have I call it Green Friday, because we meet, we analyze the market, and we're able to, really able to take advantage of it. And I know that on that day, that particular day, it happened, I think, and we had that guy in Dubai, and he was tied into us. And I remember him saying, Tom, it's blown out of the water. It's not as big as you think. And that gave me the emphasis. And like you said, we were all tied there watching it, and we got long, and sure enough, even though the market said it was down that day, it really was a huge up move after everybody figured out what we figured out, that, hey, it should go up, and it did go up. And I do remember that. But there's, like Jack had said, I wasn't fortunate enough in 87 to know enough, and I got killed. But in 2007 and 2008, I was way ahead of the curve. And I think you got to go through those experiences to make those imprints on your brain, because, people say, oh, this is undervalued or overvalued. I've never met anything that I can truthfully say that was overvalued or undervalued. And if you follow analysts on Wall Street, you'll notice their price targets are always trailing what the stock's doing. And there's a line there where they think it's going, but they always raise it when it goes up to, or when it starts going up, even after it's been coming down. So that's not something that's going to help you. So if you can learn, I guess what I would say, the short term, you can be really good on the long term as far as when it comes to stocks. Now, Jack and I have something very, very much in common, which is we like selling premium. Why do we like selling premium? There's 2 out of 3 reasons. Number one, we don't have to be right, okay? All we have to do is not be really wrong, okay? And we're going to make money. Second, if we are right, we make money. And the third is the hard part. When you are wrong, you got to know you're wrong and leave quick, okay? And to give you an example, that I had a trade I was doing privately in oil. Oil was down, 6 or 7% yesterday. And I was in crude oil, and I had shorted USO. Well, this morning it opened higher and started coming up. Then it got a little bit higher and a little bit higher. I said, oh man, I've seen this act before. I got out, took a small loss. But if I'd have stayed in that trade instead of a small loss, I'd have had a huge loss in that trade today, because it was totally opposite what you thought it was going to do based on what it's done the last couple of weeks. But that's
you're willing to be wrong,
Yeah.
You're
let me tell you,
stubborn, and that's
when you've been skinned alive like I have over my trading career, I have no problem taking losses. I mean, I will get out quicker, sometimes too quick, okay? But the point is, I would rather err to the side of risk, because risk is very important, because because if you take a little hit here, you can go pick it up somewhere else. And but Celeste, you're absolutely right to bring that up. The importance of the 24-hour market is so important. You got Asia, you got Europe, and then you've got that pre-market. Everything opens at 7 o'clock in the morning, 7 o'clock Eastern, when America starts trading these stocks, but they've been trading all night long. I mean, it's no surprise you go say, hey, this stock's up. Well, guess what? It was up in Asia, it's up in Europe, and it's up here in the pre-market. And you can take advantage of that. And I'll talk more about that this afternoon at 3. But next week is a fun week, because next week, the day after Thanksgiving, I hope people can join me. I'll be doing my standard how to turn Black Friday into Green Friday. We've done it for years. You know, I lost money, just talk about that. I lost money by probably the first 3 or 4 years I did it, Jack, because I was getting there at a normal time. The key is you got to get there early. You got to be there and sell it to everybody else that's waking up coming into the market, and but I think we're looking forward to it. It's always a fun day, and it's next week. But we got big plans this afternoon for a big webinar, and then I think there's a couple stocks. And I'm gonna give you an example of that if I could. I had
go ahead and
5
take
stocks.
the screen if you want to, Tom. Go ahead and take the screen. And while you're doing that, I want to reiterate that Tom he's going to be going really into the nuts and bolts of what we're talking about with this pre-market. So you do not want to miss that at 3 o'clock. And Adam put the registration. You can register in for Green Friday next week. And that's what I'm talking about when it happened with Dubai.
Yeah,
and then also joining Tom at 3 o'clock today. Oh, there we go. There's
Adam's going to help me do this, because I probably clicked the wrong button. Got the roadmap. Y'all can see the roadmap?
Yes.
Everybody can see it?
Yes, beautiful.
All right, I want to talk about this. Is so much fun. Notice I got the E-mini here and I got the NASDAQ here. Notice I said before we started, if this thing clears, the S&P clears about 45, 30, 33 area, it's going to have a rally at the end of the day, because everybody see that white bar right there? That's the Genesis bar, and it's basically setting up to go higher. I think the target's got to be up there at the high for the week, which is 45.41, and it went up yesterday. It hit 39 and came down. So keep your eye on that. And so if it does, there's going to be an opportunity for those that are around this afternoon. But I want to blow this up. Let me blow this up. This is fun. Everybody can see the roadmap. Let me get rid of this and do this. Yeah, okay. All right, I gave people 5 stocks. Okay, 5 stocks on a special thing I did yesterday for my new program. It's called Daybreak, but I had 5 stocks, and the 5 stocks were Roku, Las Vegas Sands. It's funny how I forget the ones that I didn't do, right? Let's just talk about the ones I did, or talked about. But look at this stock. I said, out of these 5, there's only one stock yesterday when we had our little deal. It looks to me like it's a play. Look at this. That's called Race. Are y'all familiar with Race Ferrari? Right?
Yeah.
Well, anyway, if you look at a daily chart on it, yesterday I said, this stock is setting up to go higher if it goes above 355. That was my trigger number on that stock. I said it's going to soar. Well, if you look at it right now, it's at 358.76. I picked this up, though, in the pre-market on the previous day when it gapped up, and I saw it gapped up. So if it holds that gap, it's going to go higher. And now it's doing that, and that's Race. So that's an example of a pre-market play that happened in the week. Here's a play I did earlier in the week. Now, I don't like this store, but that didn't keep me from trading it and making money. This is Target. Target, okay, did the same thing. It had a big gap. It broke out on their earnings. It held its earnings, and then it broke out above 129.50 and is about 131.32. So it was a nice little play there on Target. Those are 2 big plays this week by being there early in the morning. So what I do, just to give people a background, I'll collect maybe 5 stocks that should go up and 5 stocks that should go down. Here's one you might be familiar with or talking about in the news. AMAT, AMAT. I've never traded this stock, but I was watching it and it got my attention. But notice that it fell out of bed, it came down, and they had an earnings play. They were disappointed, but look at it right there. That was a play that came down. Now it's having a recovery. But if it goes up to about 49 and 50 and rolls back over next week, this will be a good play to come back down and test those lows. And everybody's familiar with this one. I only trade it about twice a year, but it's Walmart. Okay, look at Walmart. What does that tell you? That tells you that everybody's got the word on the street to buy it at 155. It's come down there 4 different times over the last 2 days, and it's trying to track up, but it won't get above that 160 area. And my actual place is about 161 and a half. It would have to get above, but I think this stock might be a good play to come back down. If they take out 155, it's going to go to about 151, but it's setting up good. And so what I do is I collect these stocks, and I do it the old-fashioned way. I'll put it on a clipboard. And these numbers, I trade off the numbers, and when they set up, my alert goes off. Jonathan lets me know, and I go in and I make plays. And here's one for all of my gold players. You got something to be proud of there on gold. Let's look at I'll look at GLD. Here's GLD. Now gold has come from 168 up to 186. It corrected back down, held that gap move, and now it's starting to go back up again. If you see this stock get above 185 next week, it's going to be strong all the way to Christmas, okay? Write that number down, 185.55. That's gold. But, you know, Celeste, I'm sure you do this too, because I trained you back in the day. You probably keep stocks in your hand. Jack's got stocks. I guarantee you that he goes and you get their personality down and you get into the flow and you go, they won't just pay you once, but they'll pay you, 10, 15 times a year. Now here's the stock, this stock here. If I look at every stock I traded this year, and people know this, AMD, I don't know if you're familiar with that one, but AMD is a heck of a trading stock. Okay. And I'll trade it and I'll go away for a couple months. I'll come back. I'm getting ready to trade it again. Okay. But AMD is a stock. And if you have a process, you take some emotions out of it, and you can have an event like Tuesday. Like I said, the S&P put 80% of its move before the cash market opened. And, it's sort of like you're sitting there reading the Wall Street Journal before they print it when you see this stuff happen. So I would tell people, even if you don't get up early, study those numbers before the market opens, because it tells you a lot about what's happened in Asia, what's happening overseas. And, it's pretty interesting, the things that you can do if you have a plan.
Absolutely. Having a plan, very key. And so Tom, are there any other slides that you want to share with us today, or because I know you got to get ready for that 3:00 event?
Yeah. No, other than the fact that I'm really curious about this market, because like I said, yesterday was watching paint dry, and let's see what it's done.
And talk about too, because Sandy has a good question there. Where do you study the numbers at the pre-market? Show some ways that they can.
Yeah, okay. Let me show the mini real quick. Then I'll show you. I got one. We built our own software. It's called the Roadmap software, and we built it because there were certain scans and studies that I wanted to see. But here's the example. See how that's breaking right there? If you get a confirmation above that number there, 27, 28, then this afternoon, calls will go higher. Okay. If that happens. But here, inside the roadmap, this is, we got under tables. If you look here, it's called the trade tracker. And let me just open that up, and we'll look at that real quick. Let me put a stock in there, I guess. Or there, I got a couple. Okay, it's going to fill in. You can see these are stocks that I follow or traded or whatever. But Mar was a stock I was all set to go long at $10.55. Gave a buy signal. but it didn't confirm and we passed on it. And the beauty of that, but if you look at this, let me teach everybody something. Real simple scan. I look at this every weekend, okay? But if I'm looking, okay, and trying to figure out where there's money to be made, there's a couple things I focus on. Is the monthly open. So AMD opened at 98.58. So if you buy it this month, you made money on AMD. But the key is if you look at the weekly high was 1868, 116. We're higher than that. And then you just look at this and you say, wow, that looks pretty cool. And then you look over at the 5-day high, 122 low, but AMD is obviously setting up to go a lot higher. It's at 120.84. SQQ, the stock we traded last week, is obviously coming down because the market's going higher. There's USO. USO's up there at 76. And look at it now, 70.58. It was at 67 yesterday. And on the short term, it's retracing back up, okay? But it's going to meet resistance right there at 72.96 to 71. Ego, good stock. Clorex. Here's a stock I really believe in. It's Taiwan Semiconductor. Have you ever traded that one, Celeste?
I have not traded that one, no.
I hadn't either until it came up on my scan. But look at this stock, okay? It opened the month at 86. I've been long this stock most of the month, in and out, option stock. I own the stock, but look at it. 98.90. I look over there and I say, wow, all I got to do is get above that 170 next week. We'll go to 110. You know, my rule, stock goes above 100, it goes to 110. So if people wait, set an alert, you get above this, it closes there, you're going to see 110 on this stock. And I'm really big on that. Interest rates. You've been asking about interest rates. Everybody's been asking. Look what TLT's doing. Everybody see it, 90.13. I'd say about 90, about 90.65 takes out that 10-day high, probably telling you going to notch it down, which makes the reason you're probably seeing gold go up, okay? But this feature outside the roadmap is something I do every weekend. I just plug, if, like, for example, if Jack says, hey, I like, Jack, just name any stock, name it. Now, before I actually put in money in, I'll go to my roadmap and dial in. Give me a ticker, Jack.
CBOE.
Oh, I know that stock.
That
I'm wearing
thing is
CME.
Tear.
Yeah.
Absolute tear.
Yeah, this stock, CBOE, look at it though, okay? Open at 164, last trade's 176. It passes the buy rule, right? Be long, and you make money, okay? Yeah, great stock. Celeste, you got one I can plug in?
Yeah, well, how about we take a look at Home Depot. I'm a little curious what it's doing right now.
Well, it's funny you say that because I went long Home Depot, and I did. I'll show you, but it's pretty interesting. Look at that. Open the month at 285. Warning sign. We were short, and you reverse. Now it's at 306. It's pushing 308. I looked at a long-term chart. I think about 314, 316 is probably a reasonable target if this trend continues,
Well, and also interesting too, Tom, because that $10 move plays on the $300. Like, so if a stock is at 300, it's going to go to 310, or 400 is going to go to 410. I tell you what, Tom, I've made more money off of that one tip that you've given me over the years than anything. I love that. It's a good one.
One last thing I want to tell them that I discovered. I've been trading crude oil for about 35 years. Mm-hmm. And I want you, Celeste, I know you trade futures, but I want everybody else to look at this, okay? Yeah. Something I figured out. I don't know if it's by accident. I got to tell Jeff. I hadn't told Jeff yet because I always like to keep secrets from him when he talks about crude oil.
Good. Keep him on his toes.
Yeah, but if you look at crude oil right now, 80.98. Everybody see it, right?
Yes.
Okay. But if you go over here, I'm going to teach something. Let's go to the chart behind crude oil. It's bearish if you look at the longer term trend, okay? But look at this. Let me get rid of that. Let's put crude in here, and that's January crude now, CLF24.
Just for everyone, that's the crude futures contract.
Right, expires in January. Mm-hmm. Notice it's bullish. They're squeezing crude today because they got everybody short. And they're squeezing it. Look, you can just see the squeeze going on. But here's the key, okay? Look at the over here in the metrics, well, let's just do daily real quick to show. Well, let me go to 8:30. 8:30. Yeah, 73.52. Write this down. This will make you money if you ever trade crude. If it moves $1 up or $1 down from its opening price, you'll get about a half-day trend in crude. And I've been doing it. And I said, every day I check it. And you go this week when it was selling off. Once it got $1 below where it opened, they started selling it. And I don't know how long that's going to last. I just happen to notice it. And to me, if you ever trade crude, it's pretty helpful. That's why I knew early today I was wrong, okay, on crude being short, okay? But you pick up things all the time if you study the market that will help you. And it just, some things you could trade for a lot of years, and you listen to somebody else and they give you an idea that says, let me look at that. Be open-minded, because you will learn some things by keeping open-minded and staying good. So anyway, pretty good information, I think, for people that can sit there and look at it. But look at old roadmaps, got old crude. It's confirming they're squeezing the crude shorts.
Yeah. And then one other question, Tom, before we let you go, and if you want to, because I know you need to get ready. But one other question. So like when you're trading pre-market, are you actually buying stocks pre-market, or are you waiting for the market to open, or what are you trading in the pre-market?
Okay, if that was a multiple choice question, I would put all the above, because I trade futures options prior to the market. I trade futures contracts prior to the market. I trade stock prior to the market. And so it's really all the above. I mean, like, if you look at it, that I love that time period from 7 o'clock Eastern. And if you remember, that ties in back in the days when we used to trade the DAX. Remember the 6 o'clock Central Time number?
Oh, yeah.
6 o'clock is 7 o'clock Eastern Time. Nothing's changed. It still works. That's a key time in the morning, 7 o'clock. Why is it key? Because people don't generally trade Asia and Europe, and they show up, especially people on the East Coast. They'll show up and they'll read about stuff. They'll start buying these stocks. You can actually see stocks, starting to get bids very early, in the morning.
Yeah. Well, excellent content, everybody. Tom has given you a lot of great tips already. And you need to make sure you show up there at 3 o'clock today to get even more insight and just really, really start to understand this pre-market. Asking how can you trade? And I know we can talk about that at some point, but you got to get trained and educated and know what has the liquidity, what's moving. And so I'm just telling you, just like I was there in the buy crisis because of the knowledge that I got from Tom and the trade ideas. That's why I'm really encouraging you to get there at 3 o'clock. So Tom, thanks so much for sharing all that. And we'll all be excited to watch there at 3 o'clock today.
Yeah, and you can trade stocks in the pre-market. Make sure your broker, like with TD Ameritrade, you got to change it to external. And they have stocks now that trade around the clock. I mean, the QQQ, SPY, all those trade around the clock. So we're going that way. It's going to be, here's a prediction. Might not be while I'm alive, but 7 days, they'll be trading stocks around the clock in the future. That's where it's headed. They have to.
Agree. Yeah, and
they love the juice they get off of us.
Exactly. One quick tip for you: if you've got Thinkorswim or any of the platforms, put it on a 30-minute chart, and that way you'll be able to see, or a 5-minute, just anything other than just go down lower than a day, so that you can see that pre-market activity. And a lot of stocks are trading there in that pre-market. So thank you, Tom, for all of that great information. Loved having you.
Thanks for being here, Jack. Great seeing you, lovable Jack.
Lovable Jack. All right, well, let's keep moving. Let's move on to a longer time frame. Tom mentioned that, hey, I own this stock long. And, we don't always talk about kind of owning stocks long, like as in longer term than like 2 weeks or, even a month, but really trying to take advantage of these bigger swings that last for years and even decades. So let's switch that time frame, because we talked about that small time frame. which is so important. Jack mentioned that he uses it and how it helped him trade, and even to pinpoint real incredible buying opportunities for the long term. And so we want to help you guys get in on that as well. So Jack, welcome back. How's that cigar going?
Going good. I'm about to light it.
Okay, good. So Jack, listening to, everything, that, Thomas said, and what we've been talking about, the pre-market and going into that long-term, what do you think that traders and investors need to know from that perspective as we head into, November, December? Are these good times to start thinking about building a long-term portfolio, or is there a better time than not? What are your thoughts on that with all of your experience long-term trading?
Yeah, thank you. As far as the pre-market goes, personally, I look at individual stocks that have gapped up or gapped down in the pre-market, and then I'll take either the upper side. If it's gapped up, I like to short it right when the market opens, or maybe right before it opens. And if it's gapped down and I think it's an overreaction, I'll go long. But that's just the first 60 minutes, and that's trading. But what everybody really needs is a solid foundation of stocks that they own that pay them dividends like clockwork. And that's where I got 80 to 90% of my wealth at all times, is in that solid foundation. And the rest of the stuff we're talking about, that's just fun and games. The real money is in long-term, letting corporate America pay you dividends while you're getting some price appreciation out of that dividend stock. That's where the real money's at. The other stuff, like I say, that's a lot of fun to day trade, pre-market, stuff like that. But you're going to make more money by far with passive income where you're not trying to trade. The only work you got to do is be able to click on the buy and then click on the little thing that says reinvest the dividend, and you're done.
Yeah.
But
it's hard. Go ahead.
I was just saying, this is a great time. There's never not a good time to start. And the sooner you start, the more money you're going to make. So I recommend everybody has that solid foundation, and then take 10 or 20% of that and do the pre-market or the trading or whatever you want to do, the speculative stuff. But you got to have that rock solid foundation. And once you got that, you got peace of mind. You can sleep at night. You're not going to run out of money in retirement, stuff like that. Just, you got to take care of the long-term picture before you can mess around with the short-term action.
Yeah. Yeah. And there's a lot of action in that short term. And of course, that's very appealing to a lot of people. And you think, oh, the big returns. And the key thing, about that shorter term trading is what you can do. You can use that smaller amount as you're growing that, and you dump it back into your long-term account. And it just helps it grow and grow and grow. I remember another thing from Tom told me years and years ago. He said, resist the desire to sell Apple stock. Resist it. And I think that's sometimes what we have to do as traders, is we have to resist the urge to sell. We think, oh, it can't go any higher. And sometimes we think, oh, that we're missing out on something else by holding it. But how would you respond to that, the desire to sell?
Yeah, it comes from external sources, the media. Some guy said something you read, it instills a little fear. The run, Apple's over. I talk to this guy all the time. He's saying Apple's going to drop like a elevator with the cable cut, and blah, blah, blah. Not happening. So, the other thing is, I like to quote this lady from Merrill Lynch that said, a portfolio is like a bar of soap. The more you handle it, the smaller it gets. So, I would tell people not to focus on the P&L of your long-term dividend portfolio, but just focus on how much income is this portfolio throwing off every month. And the thing about Apple is, I don't know where it is today, but it could go to $20 a share and they're still going to pay the dividend. That's the thing, is the share price has nothing to do with the company's ability to pay the dividend, which is why you got to tune it out and just, don't let the media scare you. That's the whole thing, it's be above it.
Yeah. Yeah. It's so true that the media gets paid by the more clicks that it gets and the more views. So they're for sure going to try to get just that. And so we, as traders and investors, have to be really careful about that. So it's a really good point. So Jack, too, when we were talking about, and because I do the same thing, it's like 80%, sometimes 90% of my retirement is it's safe. It's like, it's not safe as in bonds, but safe as in dividend paying stocks, capital gains, staying in the market, and then actually using that part of it, that 80%, to leverage my other 10 to 20%, where I can just recycle and recycle and recycle. And just like you said, being able to sleep at night. I remember learning years ago about, you do not want to trade with scared money. And so I practice that, so it's like, I can sleep at night knowing that, I've got my nest egg that is secure. And if I lose all of that 20%, it's really, in the whole scheme, I don't want to lose it. But if I did, then it's not going to change my standard of living. But I can take that 20% and I can churn it, and I can churn it, and I can churn it, and I can churn it and grow it and dump it in to that other pile. But that, that's one thing. If somebody asks me, hey, what's a mistake that you think traders and investors make, I would say that they trade too big on the speculative. And and I understand it, it's like, there's nothing really exciting about making a dollar. But the other thing that I learned, a big lesson I learned, is like, hey, you know what? If you can learn to make a dollar in the market, you can learn to make 100 and 1,000 and 100,000, 10,000, whatever. But you have to start with money that is not scared, and you learn that process and recycle. So that's, but it is foundational. That is absolutely foundational. But there's also, I think, in my opinion, some misunderstandings about a longer term portfolio. And I get it, because people have been told and told and told, and I was told, and I'm sure you were told too, Jack. We were both trained on Wall Street, and it's the whole buy and hold, buy and hold, buy and hold. But we didn't understand the management of the buy and hold, or I didn't, and got caught up in that. And so I think when people can really understand how, even in that 80% account that you're holding, or 90% of the account that you're holding, there are other trades that you can make in that account, because you have those positions. And I know you know what I'm talking about, Jack, but if you could just kind of share with the folks here some ways that you take that big chunk and use it to trade multiple times.
Yeah, I do. I like to trade. I love trading and I love investing, but like you say, it's kind of boring. It's not nearly as exciting, but there's a lot of great lessons to be learned in that, no matter where you are in life. I'll give you a quick one. As I bought my oldest son 7 shares of McDonald's for his 7th birthday, and this was like 27 years ago. And I told him, don't ever sell this stock. What I want you to do is just learn from it. I mean, you already know McDonald's. He loved it when he was little. I let him eat it maybe once a week, but he understood it, and he still has it. And he's up. Last time I looked, he was up 4,600%. That this, he's never going to get a gain that big, and I'll never have one that big either. And it all came from just ignoring it. McDonald's has had its ups and downs. It's had all kind of problems. It lost all of its franchises in Russia. It deals with problems constantly, but those guys, it's great management, and they find a way to win. But not about McDonald's, but just the longer term picture is where you really need to focus. And then, I don't take the shorter term stuff as serious as I take the longer term stuff, but I'll buy and hold something, and unless it really gets bad, I'll just stay with the stock. No matter what. If you got the right ones, you don't have to worry about it, because again, the share price has nothing to do with their ability to pay the dividend. And for me, that's what it's all about. Another stream of passive income.
Yeah. Well, and talking about, the big dips in the market, nobody likes to feel those, but as experienced traders and investors, there are ways that we hedge our portfolio. It's like, maybe if I'm holding McDonald's stock, maybe I'm not, and I want to hold it through the turmoil. I don't want to sell. I've got long-term, I want to keep it. I feel pretty confident that it's a rather temporary kind of a pullback, like a Dubai kind of a thing. But there are things I can do in my other trading accounts to really hedge that entire portfolio.
Yeah.
Thomas talked about those. You have talked about those, Jack. We've talked about them here on Ask the Pros. And so I don't have to think of like, oh, I'm shorting McDonald's stock. I can take a short position on the whole S&P. I can take a short position on the NASDAQ or the Dow. Broad markets using ETFs, using options, a lot of very liquid plays that help us to, sleep at night, even when our bigger portfolio is pulling back, because we know, just as we talked about today, that, well, two things. Number one, if the world is going to end, we have far bigger things to worry about than our bank account. And number two, the world is probably not going to end, because the world is full of people like you, Jack, and Tom, and everybody that's here listening, entrepreneurs, fighters, people who have brains, they're educated, and they are looking at this. We're talking about influencers, big money influencers, they're looking at that and they're like, I mean, just like you did at the beginning of the show, it's like, yeah, bring it on, because you have knowledge to do that. So how are some ways that you approach that, Jack, or what are your thoughts on what we're talking about?
You can hedge it all kind of ways. You can do a married put if you're really worried about your stock. You buy a put with the strike price that you own the stock at. That way, if the stock goes down, the put goes up. That's the best hedge in the world if you have a real volatile stock. But the other stuff, I just let it go. I don't pay attention to it. And I just focus on, where do I have a trading opportunity? Maybe that's a gap up or a gap down in the morning. And you can build that account up, but it's like two lives you have. You
Right.
have one life as a trader and one life as an investor. And you got to kind of keep that stuff separate, and just not worry about the long-term stuff. Long time ago, I learned never bet against America, ever. It's just our economy. It might take some hits here and there. It's like a boxing match. It might lose a round, but it's going to win the fight. So I believe in America. I'm long it. I don't buy foreign stocks. I don't buy Chinese stocks. I don't buy any. I don't trust their accounting. I don't even trust our accounting, but I'm willing to go with it. So yeah, it's like two lives. You got Jack the investor, who loves income and dividends and get some capital gains long term, not selling it. And then you got the Jack that's day trading and doing his weekly stuff for income there as well. So yeah, different accounts too. That's kind of important, is that I got these IRA accounts, I got that HSA account, I got other IRAs I manage for my family, and they don't even know how to log into it. And I like it like that, because if my sister knew how to log in, she saw something scared, she gets wiggled around. So I tell her, you're not even getting into this account. And it saved her. Like ConocoPhillips, I'll give you an example. She had that and just screaming about it. And now she's like, oh man, I'm glad I didn't sell that ConocoPhillips. And I'm like, you stick to the veterinarian business and let me stick to the stock market stuff. And it's worked out good like that. But you got to have two separate lives and separate accounts, so that you're not drawing off that long-term account to fill in your little day trade stuff. Set aside 10 to 20% of what you want to put the big bulk into dividend stocks long-term. And then you got your 10 to 20% in a different account that you take shots with, or whatever you want to do.
Yeah, that's really well said. And that separation in the mind of the two different lives that you're leading,
Yeah.
that really helps you to navigate the short term and the long term, all the things that are going on. What would you say, Jack, as people they come into like Ask the Pros, or they get associated with us, with our different gurus and so forth, and they come from different backgrounds, like veterinarians and so forth. And if they're coming in there, they really want to make a go at this trading, what are kind of some things, how would you kind of tell them to approach it as they are learning and starting to trade, whether it's long-term or short-term or both? What would you say to them?
I'd say the single best thing you could do is learn how to sell covered calls on the stocks you have in your long-term portfolio, because that way you're going to learn so much about options, and especially how an option can expire worthless. And the reason I say that is, I don't know of anything else in the business world where you can sell something to somebody today that's eager to buy it and pay you today, and then have that thing be worthless in a week or a month or 40 days. The only other thing is maybe fruits and vegetables or flowers or something. But, you know, in the business world, to be able to sell an option, take that premium, have it instantly hit your account, and then have it go to zero value. That's one of the best things in the stock market. So you can combine your long-term stuff with covered calls, which is like the safest. It's even safer than owning stocks, according to the CBOE. So you'll learn right there. And that's the covered calls have made more people more money than any other trading strategy with options, probably all of them combined. Yeah, it's almost like free money, Armand says. And if you do it every month, the only way to screw that up is to stop doing it. So that covered calls, you got that premium, you could take that and spend it, or you could sell those covered calls and buy more of the dividend stock. It'll reinvest your dividends. But that's a really good way to start, because you can't really be successful in options until you're successful with stocks first, right? That's what I believe. I don't believe anybody can be successful with options without knowing how stocks work. So this way you get the best of both. And then you see how stocks move. Maybe you want to buy a call or sell a naked put to get into a position, you know, just branch out from there, but start where you are. Like, right, you start right where you are. If you got one stock, maybe add it up, get 100 shares of it, and then sell a covered call. But start where you are, ease into it, right? And then when you got that covered call premium, if you let that add up, you can trade that money, because that's the house's money, right? If you lose it, you lose it, because you got it from, you created that money to trade. That's what I would do. That you're taking very little risk, and the risk you are taking is off the house's money, and you're going to learn so much. And go slow, you know, and set your expectations. Like newer traders, I talked to a guy the other day just through email. You know, you can't make 40% per month, right? That just, I don't believe you can do that, or 400% a year. That ain't happening. So your expectations have to be kind of realistic. And
Exactly. Jack, you know, and I want you, if you don't mind, you know, let's, we'll go, I'm going to let you tie this all up and send our folks off with some just really great tips here today. We've had a really great program on Ask the Pros, and Tom's coming on at 3:00. So, Jack, you know, share with them any other insights that you think are important for portfolios and trading in general as well. And thanks everybody. I'm going to sign out for right now. Thanks, Jack.
Yeah, well, before I tell that, I really want to tell you something more important. I mean, the stock stuff, it is important, but I'm going to give you something that's critically important right now, and that is how to eat your Thanksgiving dinner. Okay. What you want to do is take your plate and fill it up with gravy first before you put anything else on it. Then put the turkey, the mashed potatoes, the green beans, the stuffing, then put more gravy over that. And then also always make sure you have your own gravy boat, like right next to your plate there. And then you'll be all set for Thanksgiving. That's the best way to eat it. And then going into the stock market, find a couple of stocks that you want to buy and hold long term, and not worry about the ups and downs they go through. And then build up 100 shares on something, maybe that same long-term stock, and then sell a covered call against that. And at the end of the time when that option expires, let's say you do it 30 days out for expiration, then when that expires, you're either going to be called out of the stock, in which you're going to make the difference between the strike price and the price you own it, and you're going to make the premium. So at the end of the month or whatever at expiration, you're either going to be called out or you're not going to be called out. And if you're called out, you made a big profit. If you didn't get called out, you still got the stock, you sell another call. And every time you do that, you lower your cost basis on the stock. Every time you sell a covered call or take in a dividend, you lower the cost basis on the stock. And there's a guy that works with us, Charlie, you may know him. He's done this so many times, covered calls on Apple, that his cost basis on Apple is zero. So, I mean, it's awesome. And if you think about it like this, think about it like the stock you got, you're going to use that as an asset to create income. That's really what selling covered calls is all about. But imagine on Apple, every month you're selling covered calls and you get that cost basis down every time you do it, till the point you got no cost in Apple at all. It's free. And at that point, you're buying more stock. I mean, that's where the big money's at. So start small, enjoy your Thanksgiving. Don't forget, maybe write that down, that tip I gave you about how to do that. That's critical right now. You'll enjoy it. And then go out, have a nice cigar and a glass of scotch after your Thanksgiving dinner. That'll clear your head. It'll help you focus on which stocks you want to buy that Friday. If it's wild at the Thursday after Thanksgiving, anytime a stock goes down, the yield goes up. So it's always a good time to start, even take a nibble. Maybe you don't want to buy 100 shares right off the bat. Maybe you start off with 50 and then you add a few more and get yourself up to 100 shares. And here's the thing you could do right now today. I mean, I'm sure a lot of you guys already, gals, you already have positions. Well, just go in today and look at the options chain and pick a strike price about 10% higher than where the stock is today, and pick an expiration that's about 30 to 40 days out, and look at the price you could get for selling that call. And if you do that on all your stocks, you might be shocked about how much income you could make this month right now, just by doing that. And I say that because I talked to a guy that he had a pretty sizable account, but he didn't know anything about covered calls. And when I showed him how to do it, he says, "Hey, Jack, I can make $1,600 per month just selling covered calls." And again, the only way to screw it up is to stop doing it. So I'll leave you with that. Everybody have a good Thanksgiving. You can't have too much gravy. All right. You just cannot have too much gravy. And maybe you take one of those dinner rolls and peel it open and put a couple of pats of butter on it, and put that in the gravy too. It'll be amazing. I can't wait personally. I'm planning on gaining 20 pounds. All right. So that's what I got for you. I'm glad you guys are on here. I hope you got some good tips, and I'll leave you with that. So it'll be adios amigos.